Good morning. As we can see, we have discussed about supply and demand yesterday, and today we are going to discuss about the candlestick patterns. And overall, we are going to discuss about the candlesticks and what is the total meaning of candlestick, and how candlesticks are formed, what are the intensity that with candlesticks are formed. So this is a basic introduction of today's class. And as we can see here, yesterday we have discussed that candlesticks they are the representation of supply and demand. And when supply and demand is displayed in a form of candlestick, that is what we have learned yesterday. And as we know, yesterday we have discussed that demand when demand comes into the market, then it is displayed in a color of green, and when supply is coming into the market, then we can see it in a red format. And the main thing about candlesticks are where the price has opened and where it has closed. So here we can see the price has opened here and the price has closed here. That means that there was a positive momentum in the market and there was a demand in the market for that particular stock or commodity, where we can see that the price from the price which it had opened, it has closed above it. Let's just say we are talking about Tata Motors, and it has started yesterday at 217 rupees, 717 rupees, and from there it has closed above 717 and at a price of 730. Let's just say this is the scenario, and we will be able to see a candle that has formed from 717, that has been opened, and till 715 it has come, and from 717 the demand has pushed the price till 730, and from 730 there was selling pressure again, and it has closed at 725. So what the body of the candle is starting at 717, the body of the candle is still 725. That is what we can see in a demand candle, or else a positive candle, we can say a bullish candle, we can say. And similarly, when alternative scenario where the price has opened at 720 and it has risen to 730, but there was supply coming into the market, and so we see that supply has eaten away the demand that is there till here, and supply has pushed the price below. And then we can see that supply has pushed the price below 17, and it has closed till 750. So this is what we can see. Then we see a red candle in the market. So we'll see this in a this is a Tata Motor stock, and we can see this is a weekly candle. We are going to switch to daily candle. Here, as we can see clearly that the price has opened here at 720 almost, and price has dropped till 715, and from here the demand has come up, and the demand has pushed the price till 730, 735, and again supply has come by, and that's why the body which has formed is in green color, and the price that has opened, the price that has closed is above the price that has been opened. So that is why there is a green candle here, and this is the real body of the, I mean, this indicates that apart from the momentum that had happened in the stock, that had happened in the Tata Motor stock in yesterday's session, we see that the body formed is above the price that has opened yesterday, and that is why the body is in green color. Similarly, if you take a red color candle, what we observe is this is where the price has started, and this is the price has been pushed down. I mean, there was a selling pressure, there was supply pressure in the market, and that is why the price has dropped till here, and then the market has closed here. That is the reason on a daily candle we see that red candle has formed here. So this is a basic introduction of candlesticks, where we see that when a candle is formed, it is formed in either in the green color or in a red color, and when a price is closing above the price that has started the market, I mean on a day, then we see a green candle. But in case the price has dropped from the opening of the day, then we see a red candle. This is the basic introduction of a candle. And apart from that, what we see is when we need to understand a chart, the basic things that we have to understand is on an x-axis we see that price is momentum. See here we see that price is moving up and down. So this is a price momentum. So whenever we see a candle from moving from here to here, we see that price has been pushed from this point to this point. On an x-axis we see candlestick as a price momentum, and the same thing on a y-axis we see that this is a time frame that we see in a candlestick. So whenever we are reading charts, we have to understand these two patterns. There is a x-axis and there is a y-axis. On an x-axis we see the price movement, on a y-axis we see the time movement. So in order to understand a candle, we need to understand what is the time frame of a candle and what is the price movement of it. These are both the things that define a candlestick completely. So let's just consider this candle. So this candle the price was 638. The price was 638 somewhere around here, and from here the candle has started, and this candle happened to be on a day on a 7th May 2025. So this was a candle, this is a daily candle, and as we know, this is on a y-axis we see that days, time frame is defined on a y-axis, price is defined on a x-axis. This is a basic essential of candlestick, and here we see that price has started at 638 on a day 7th May, and from here there was a price momentum and there was demand in the market. There was demand for the Tata Motors stock on that particular day, and we see that the price has closed above from where it has opened, and till where it has gone, the body closed at 674. So what this candle indicates that there was a price momentum on the day of 7th May where price has opened at 638 and the price has closed at 674. So that means that there was a momentum, there was a positive momentum in the Tata Motors stock, and in a single day the price has moved from almost 638, 640, let's just say 640 to 678. So there was a 35 rupees momentum in the market for the Tata Motors stock on the particular day. This is how we read the chart. This is how we understand what happened on the particular day of 7th May on the chart of Tata Motors. So similarly, we'll take yesterday's chart also. So here, as we can see, the price was at 720, and the price was at 720 on a day 10th June 2025. But on the same day, the price has closed above here. The price has closed on a price of 732.05. So what does it mean? That on a day of 10th June, the price has mobilized, price has moved from 720 rupees to 732 rupees. There was a price momentum of 12.5 rupees, and that was a positive momentum, though. So we got a green candle. So in order to read a chart, in order to understand candlesticks, the basic thing that we have to understand is, in an x-axis we see the price momentum, on a y-axis we see the time momentum. So after that, what we have to see is, this is a daily candle. So it is a daily candle. In a day we have almost 6 hours of trading in Indian market, let's just say. So we will be finding 6 candles of on a particular day. We'll see this again. So what we are doing here, we are shifting our daily time frame from here to, we are shifting to 1 hour candles. So as you can see, on a single day, that was a single day candle. So if you have to see inside that candle, what happened on the day particularly, if you have to introspect into the single candle, then we will go into that candle, we will change the time frame from 1 day to 1 hour. So this is a 1 hour time frame candle. So in this, as we can see that this started on a 10th, and we have 1, 2, 3, 4, 5, 6, 7 hours of trading happened on the day. So on the day, price has started at 720. We got a bullish candle on a daily, on a 1 hour time frame. 1 hour time frame, we saw a bullish candle, and another bullish candle we saw, another bearish candle, another bullish, bearish, bullish. So at the end of the day, the price has risen from 720 to 732. So this happened over a period of 7 hours. This is a 1 hour candle. So if we want to see what happened inside the candle also, we'll go deep into the candle and see what happened into the candle also. So as we have understood, this is this won't change. The x-axis won't change, the price won't change. But on a y-axis, where we have to differentiate in a time frame. When a candle is formed, it is formed in a daily candle, it is formed in a weekly candle, it is formed in a hourly candle also. So as we as we go forward, this is a very important aspect that we have to consider. Time frame analysis is so much important in a candlestick. So yesterday candle, we'll again go to the 1-day candle. So this was a 1-day candle. This has a price momentum from here to here. This was a daily candle. So inside a daily candle, what happened? We had a 7 hours of trading. We had 7 hours of trading, and in the 7 hours of trading, each and every candle indicates 1 hour of trading that happened, and that candle shows that the price has moved from above 720 to almost 725 on a first 1 hour, and second hour it has moved from 725 to almost 732 on a second, and that means that in 2 hours of trading, the price has moved from 720 to 730, and after 2 hours there was some green candles and red candles. At the end of the day, the candle has closed above 732. So this is what happened on a daily basis of a Tata Motors chart. So now we can understand that when we consider candle, on an x-axis there is a price movement, on a y-axis there is a time movement. Inside time movement there is a 1-day candles, 1-week candles, 1-hour candles, 30-minute candles. So there are many candles. This time frame analysis is also very important in understanding if you are going to take a trade, what is the time frame that we are considering in a trade is much important. In further classes, we'll get to know how we need to understand the time analysis also. But as of now, when we talk about a candlestick, what is the time frame that the candle has formed plays an important role. And apart from that, what is the time movement? What is the price movement that has happened in the particular candlestick? Okay, this is the basic of candlestick. So now we have understood that a candlestick, when there is a supply, then there is a red candle form. When there is a demand in the market, then there is a green candle form, and that is what we have understood about the anatomy of the candlestick. So now we are going forward and we are understanding the body, how body impacts a candlestick. That is what we are gonna go further. So from here we see that there has been a price momentum from this point to this point. Okay. And from here there was a supply domination. As we know, supply and demand are the only things that impact a candlestick. So here we can see that demand has pushed the price from this point to this point, but from this point there was a supply pressure in the market. So the market has sold off. The market has again been pushed down. Supply has pushed down the price from this point to again this point. So the body where the price has closed and the body that has formed indicates that the price was opened here and the price closed here. So there was very little movement in the market. There was a lot of volatility, but at the end of the day, there was strong pressure from supply side. So that indicates that this candle form has a very tiny body and a very long wick. So this indicates that there was a supply pressure in the market. This candle shows us, this candle has a meaning that there was a supply pressure in the market, and similar thing happened here also. The price opened here, the price was pushed above, demand pushed the price to this point, but then supply pressure has come up and it has pushed till here. So price was opened here, price closed here, and the body is small, but at the end of the day there is a strong supply pressure in this candle. So whenever we need to understand the type of candles, when we need to understand what are the type of candles that happen in market, we need to understand how supply and demand are indicated on the market. And here we see that in both the candles, either there are green, either they might be green or they might be red, but this candle indicates a selling pressure. So this is what we understand in this particular two candles. Irrespective of their color, the market shows that there was strong supply pressure in that market. That is what these two candles indicate. They are called shooting stars. They might be that the name doesn't have any strong impact, but understanding these candles makes a huge impact in the market. So we'll go further. We'll see that we have a hammer candle, and in a hammer candle we see that price was open here, but supply has pushed the price down. But at the end of the day, the demand has risen up and it has closed above from the price where it has opened. So this indicates that there is a strong demand in the market. So this either it might be a green or a red, but this candle particularly indicates that there was a price momentum upwards and there was a demand pressure in the market. Similarly, this candle was open here, the supply has pushed the price down, but demand has come up and demand has dominated the candle. So demand, these both candles indicates the same thing, that there was a demand in the market. So as we know, supply and demand are the things that define a market. These two candles, though they might be green or red in color, but both have strong demand indications in the candle. So that is what we see in these two candles. These are called hammer candles. As we go further, we'll see where these candles are most probably will happen in a chart and what the patterns will indicate. But on an individual basis, we have to understand where the supply and demand have come up in the candle and how much impact they have on the market. Okay. So these are few other candlestick patterns. You don't have to remember those names because name of those candles are irrelevant. But apart from that, when they are formed, how they are formed, and what is the impact of those candles on the market is most important thing. So as we can see, hammer and inverted hammer, these are two candles that have been formed. As we can see, there was a supply pressure on this market. That is why we have got three red candles. That means the price has opened here, the price got closed here. The price opened here, the price got closed here. The price opened here, consistently for 3 days, we see that supply was in a domination. And after the supply domination, what happened is the price opened here, the price got pushed down, and from here there was a reversal, there was a demand that happened in this candle, and after the demand has come up in the market, the demand has pushed the price from the opening price to close down here. That means that this candle indication indicates that there was a reversal in the market. There was a supply push, and again demand has come up and demand has pushed the price above. So this candle indicates that there might be a possibility of a reversal in the market. This is what is this candle indication. And we'll see the same thing here. This is not precise. This might not go up because there was a supply, and after that supply has pushed the price. Irrespective of forming a green candle or inverted hammer, this might be a continuation. You don't have to follow everything that has been shown. So there was an indication just to mislead you. But when your knowledge is strong, this means that there was a supply here, and though it formed a green candle, there was a supply domination here, and most probably this will be a continuation of the trend, and we'll be seeing red candles here. So irrespective of what has been indicated here, what we can observe with the candle is that there was a supply and there might be a continuation. There might be a possible continuation in this candle. That is what we observe in this pattern. So we are further seeing more patterns, but the basic of it is candlesticks, they form, let's just think that candlesticks are a kind of a ABCDs. Okay. When we understand a candlestick, then they are just alphabets. They are just alphabets of charting. Okay, ABCDs of charting. So when we combine those alphabets into forming a word, then we'll form a pattern. When we make, let's just say, when we are seeing along with some other candles, then we see a word. When we combine that word into a paragraph, then that word has an impact. So whenever we see a candle, when we want to judge a market on a single candle, that is not ideal, because a single candle is just like an alphabet. You can't decide a story depending on single alphabet. So similarly, depending on a single candle, we can't define the whole chart. So in order to understand this, we just have to simplify it, that every candle is like a alphabet of a poem. If you have to understand the whole story, then you have to understand the whole perspective that in which the candle has been formed. So candles are just like ABCDs. When we combine those ABCDs into other patterns, then we will form a word. When we combine some words, then we will form a pattern. When we form a paragraph, that means we will form a meaning of a chart. When we keep that sentence into a paragraph, then we will form the whole story. So in order to understand a chart, we have to understand that candlestick indicates that just it's an alphabet in a larger perspective. You can't define a whole chart depending on the single candlestick. That is what we see here. So here we have a bullish pin bar pattern. Here there was supply, and again there was supply that has pushed the price down, but demand has come up and has closed above the price where it has been opened. So this indicates that there might be a reversal. Similar thing happened here also. There was demand, that is why we formed three candles, three green candles, and after that we see that price was pushed up, demand pushed the price up, but their selling pressure has come up, supply has come up, and that is why we see that here we have a long wick. This means that there was a supply pressure on the market. After continuous demand, we see a supply pressure. So this indicates that there was a reversal in the market, and that is what indicated here, that after reversal there was supply pressure here, supply pressure. So this pattern is complete like this. Similarly, there are many patterns, but at the end of the day, the main thing that comes to is, if you understand a single candlestick, you will understand the whole pattern. So you have to understand what let's just say this candle, what does this candle indicates? This candle indicates that there was a supply pressure, and after that supply tried to push the market down, but demand has come and demand is slightly up. It is not totally up. Let's just say if demand is totally up, then the candle would body would have been formed here, but there was a little demand. So we have to wait in this kind of circumstances, and we'll see what is the further market and what is the further candle that the market has formed. Here we can see that after this candle there again was a demand. So in this candle there was a selling pressure. So this selling pressure has been negated with this candle, and after negating this selling pressure there was a demand in the market. So this format shows that there might be a reversal again in the market. So this was a supply pressure. The supply pressure has been halted here, and after halting the supply pressure there was a demand that came up, and that is equal to this previous candle, and now we can see the reversal. So mostly these kind of things keeps happening in the market. As market progresses, as we have discussed yesterday, market doesn't go continuously on a single side. If it is selling pressure also, it is like elastic band, where market will go a little bit and then it takes a reversal. If it is in a demand also, it will not go continuously towards top direction. It will again halt and it will return. So it will always maintain its equilibrium, and that equilibrium, if you have to maintain, there will be forming some bullish candles and some bearish candles, some halting candles. So this is also a similar circumstance where we see the demand has pushed the price up, and here we see that there is a doji candle formed, kind of evening star candle. But at the end of the day, this candle indicates that there was demand, but there was supply also. So this, because the body is small, this indicates some kind of supply pressure also. So that is what indicated here. Supply has come up, again demand has come up, but demand could not overcome this supply. So again supply continued. Same thing here. There was demand. Afterwards, what happened? There was price opened here. Price pushed up. It came down. Price pushed down. It came up. So what happened at the end of the day of this candle is, where the price has opened, there itself the price has gone closed. So this indicates that the momentum towards upwards has been halted. So my market is again in a tug of war. Let's just say there is a supply pressure, there is a demand pressure. In between them, there is a strong tug of war. This indicates a tug of war, strong tug of war. This is called a classical doji pattern. This often happens in the market, because when market is not sure which side it has to take, then it most probably will have a strong confrontation between these two forces of supply and demand. And when there is a confrontation between these two forces, then most probably this candle had to happen. That the price, they do not want the price to neither go up nor come down. So there is a strong competition between supply and demand. That is why we see that there is a doji candle forming in the market. Again, the same similar circumstances. As we can see, there was demand here, and again demand tried to push the price up, but supply has come up and pushed the price completely down. The price got opened here, the price was pushed up, and supply has come up and pushed the price down, and the candle has closed from the at the point where it has been opened. So this indicates that again there is a strong supply in there. Similarly, here also we can see that there is strong supply coming up in the market, but when supply tried to push down, then demand came up and again pushed the price up, and candle got closed at the same point where the price has been opened. So this also indicates that there was a reversal. There is a kind of a demand pressure coming from below. So that is what is indicated in this candle, and that shows that there might be a possible reversal in this candle. Okay. So overall, as we have seen today, what we can understand from the class we had today is there is a way to understand candlesticks, and whenever the candlesticks are formed in a chart, there is a importance for a single candlestick. But single candlestick is not everything, and also time frame is very much important, because if we are deciding a chart on a single candlestick and we are following a 5-minute candle, let's just say on a 5-minute candle there are multiple candles that will be formed in a 1 hour frame. So taking a 5-minute candle, we cannot decide the whole chart. So our analysis is like this example always comes up, that single candlestick is like a ABCDs. So we always have to understand candlesticks has a role to play, but its role is limited to 10 to 15% in the market. Depending on the market conditions, depending on the market vibe, these candlesticks will be formed. But candlesticks have a role to play. They are at most 15 to 20% have value, and when they are combined with other factors, market conditions, indicators, and overall supply and demand. So we'll understand that candlesticks will play a role, but they are not everything in a market. So that is what we have defined here. We'll see some examples also. As we can see, this is a current candle that is forming today. Right now, this is a today's candle. So market has started on 11th. Today we are discussing this candle. So this is a 5-minute candle. So as we have discussed, in a hour we'll have almost many 5-minute candles, but what we can see is price was started at 731, and we see that there was a demand that has come up, and that is why the price was pushed from 731 to 737. Right now the price is at 737. So when we see this in a daily candle, when we see this in a 1 hour, let's just shift to 1 hour candle. See, this is a 1 hour candle of the same chart. We see that price was pushed down. So there is strong demand. If we go into that 1 hour candle, we'll see that there was also strong demand, but in 5 minutes they are differentiated. So in a 1 hour, in order to complete this candle, we have got 47 minutes still. After 47 minutes, this candle will be complete. Let's just say let's just go to the single day candle also. On a single day candle, see that there are more 6 hours 2 minutes for this candle to complete. In those 6 hours, there might be some selling pressure, there might be some demand. This price might go much above. We never know what is going to happen. But most probably, since the market is looking upwards, most probably market will go up, and we might see Tata Motors finishing at 740 on a 11th June 2025. But in order to understand, there is in order in order for this candle to complete, there is still 6 hours to go, and in those 6 hours they will be forming 6 1-hour candles, and in those 6 1-hour candles they will be forming many 5-minute candles. So time frame is of crucial importance in understanding candlesticks. Most probably, when we have to analyze the chart, we'll be following daily or weekly candles in order to have a larger perspective, in order to have a understanding of the larger chart pattern. But when we are trading advanced setups, let's just say we are trading options, we are trading futures, or else we are gonna be in a trade for 30 minutes or 20 minutes, then we have to analyze smaller time frame candlesticks also, because smaller time frame candles indicates uh, shorter time frame trades. But when you are investing, let's just say you are investing and you are trying to hold for 6 months or 1 year, then we most probably will be seeing 1 day or 1 week candles. So I hope I have made clear that if I mean, what is the kind of trade we are going to take? If you are going to invest in a company, invest for a time being of 6 months to 1 year, then we probably should be looking at 1 week or 1 month candles. Or else, if you are in a trade for, let's just say, 1 month, or else 2 weeks hardly, then we will go to 1 day candle. But if you are planning on a day trade, when we are going to be in a trade for, let's just say, 30 minutes or an hour hardly, then we have to skip our time frame. Then we have to come into the 5 minute time frame. Depending on the trade that we are going to do, will be defining the time frame. So that is what a candlestick is. It is a time frame on a y-axis, price on a x-axis. Depending on the price movement, we will be forming a candle, and depending on the selling pressure or else supply and demand, we will be forming a red and a green candle. This is a basic understanding of how charting is done. We will be further seeing patterns and pattern continuations or pattern reversals, and the same thing again. We just understood ABCDs today. We will be understanding words, we will be understanding paragraphs, we will be understanding the whole story of a company. So this is what is for today's class. Thank you.